We go back with the pitch battle. We still have 2 startups to hear this afternoon, and also the scale up later. So again, thanks for all the picture of this morning, and we look forward to hearing from you. Thank you.
So thank you for having me. I'm not pitching today. I'm just trying to energize you a bit from this morning. I think it's always great to see. I was there last year pitching, and fortunately we won the public prize, which I think is always great. In a very short two sentences, what does Penbox do? We digitalize the way companies gather information and documents from their own customers. And we do that by offering an all-in-one, out-of-the-box platform that they can integrate as of day one. So this is what we pitched last year. I think it's always also cool to see what we have done in between. And I think we've done a lot. We've grown a lot as well. The first one that we're very proud of is we are the first InsurTech being integrated with the biggest CRM for brokers on the market, which is Brunel. The CEO is somewhere here. And we have built a lot of additional InsurTech partnerships. I think it's really, really cool when you are in these kind of stages and you have a lot of startups and scale-ups that are there. Take the opportunity to create links and then try to integrate with each other. I think your product will be much better. Another thing that we have done is we raise money. It's always great if you want to sustain your growth. We have already a very good cash balance, but we wanted to go way further, so we raised that amount. It's actually not yet on the news. You will see it next week, probably all over the place. We have a very strong growth, as I was saying, over 30% growth by month. We have over 150, I don't know how much, but over 150 very happy customer. We only had one churn, and we have a very high NPS, which I think is always great to measure as of day one, to make sure that your current customer, which are the best advocates of your product, are very happy. And finally, I think when you build a platform, what is very important is not to have just nice slides and nice ideas, is to have something that is really reliable in those world, especially financial world, insurance world. And reliability is something that you build over time with a lot of interaction, people using your product, and we have, I think, over 150,000 interactions, successful interaction with our platform today. Where we are going tomorrow, I think that's very important when you raise money. What are you going to do with it? We are already in the big insurance market, but we are heavily investing in entering the big companies, the AG, AXA of these worlds. And we do that in Belgium, but we also do that in the rest of Europe. We start with France. We are already in France, and we are very soon entering other markets to continue our growth. And finally, I think, does that work? The tips of the day, obviously, I won't ask you to change your presentation. I think there's very much, quite a lot for that. But if I can give you a few tips that I believe made us won last year. First, do it with passion. It's nothing about your text, it's nothing about your slide, it's how you are going to present it. If you're not passionate about what you do, who else will be, right? So please be very passionate about what you do. Show some ambition. You will have some questions, and I think if you show a lot of ambition in your answers, that will probably help you win, at least from the jury. And then enjoy it. You don't have often the chance to be on stage with a lot of great people, a lot of great jury members. Enjoy it. It's not every day, and I think I enjoyed it last year, and as you can see, I'm still enjoying it right now. So that's it. I leave the floor to the real participants, and enjoy the rest of your day.
So what was it? Passion, ambition, and fun. Let's give that a go. So hi guys, no slides, just have to look at me then, no problem. So maybe introduce myself. I'm Vincent, co-founder and CEO of Trensition. And Trensition is a Belgium-based AI-driven startup. We work for international corporates and consulting companies. And at Trensition, we're on a mission, and that mission is to bring cutting-edge AI-driven strategic intelligence into your boardrooms. Now, what I really mean is that we monitor, we analyze, and we predict all kinds of trends which impact you as a company. Now, you might ask, what do you exactly do then? Huh? I can see you looking at me. So, you're all here at the Digital Finance Summit. You're all wanting to learn something about the next big thing in finance, about trends that are impacting finance today. So you really already acknowledge that there's like a strategic importance of doing that. But did you know that there was a McKinsey study who has calculated or proved that companies who are able to focus on long-term, who are able to anticipate change in the future, that they outperform their peers on almost any financial metric, including company revenue, with up to 47%, which is huge. And you don't have to believe me. I would have had a slide of one of our customers, Hans de Cuypers, CEO of Ageas Group, who had said that they're really integrating long-term strategic planning into their DNA, and they're using us as a good guide to give them direction in this fast-changing world, to basically help them make better decisions. And this is exactly what we do. We already work for leading companies in the field, so Ageas Group, but also BNP Paribas Fortis. So we have a lot of experience in the finance world, where we scout, monitor, and analyze trends that are impacting the business. And we're supporting strategy teams, innovation teams, to help them make better decisions. So how does that work? We have a tool, we've automated it, it's called Trend Tracker. Trend Tracker is our cost-effective, efficient, automated tool which is able to scout your future. And what it exactly does is that from a technology perspective, we monitor huge amount of data, so big data, globally available news sources where we're able to find trends, and we search for trends. We link that back to contexts like the finance industry or specific companies. We score these trends, and we can even predict how these trends will evolve into the future. And by doing so, we can support different decisions, whether you're interested in long-term strategy planning, whether you want to know what to put in your innovation funnels the next coming years, whether you're interested from a risk perspective or you want to have some ESG intelligence, we can really build these solutions tailored to your specific context. And this is, in fact, what Trend Tracker is. It's a strategic intelligence platform tailored to your specific context. All right? So what I really want you to remember about us, what makes us unique in the market today, is three things. First of all, we can really tailor our insights. And like I just said, we look at trends, global evolving trends, we look at your context, and we tell you what will change for you. So what's coming, when will it hit you, how and when should you respond to that change? This is one thing. Secondly, we do that continuously. So it's not a one-off. It's not like a report that you get. We scan the world continuously. So whenever we see new emerging trends appearing, we pick it up. It doesn't really have to be even in finance. If we pick it up in retail or in the media industry, we can say, okay, we see a new product, a new business model, might be interesting the next coming years for finance because we see that they're targeting the same customer segments, and so on and so on. So we scout it continuously, we tailor it, and we can do it not only for technology trends, we can not only do it for finance trends, but for basically any trend. And this is how the world evolves. We're not impacted by only finance trends here, like you see here in the event. There's also trends related to society, economy, politics, and you need to see the full picture to really understand how this is all affecting you. And this is what our strategic intelligence platform, Trend Tracker, really is all about. So maybe to round it up, if you want to know the future of finance, if you want to predict what will hit you, if you want to do it continuously, if you want to know when and how to act, then we are the company for you. Trensition with an E. If you need to vote for us, please do. I think I'll end my pitch here. Thank you very much.
Thank you very much. I think my first question would be about a use case. So it's pretty clear the where you interact and where you actually integrate your services within a company, and it's a very impressive list, I have to say. But my question is more, I struggle to understand a concrete use case, because when you say we can track every trend, it seems a little bit complicated to imagine that you can track every trend that is in, I mean, yeah. Do you have a use case? Doesn't have to have name, but at least to give a little bit of flavor to it.
Yeah, sure. I can give you a couple. One of my head. Okay, one that I always remember first when they ask me these kinds of questions is for the same company that I just talked about, Ageas Group. We've been working for them for 2 years and a half since the very beginning of our existence. And we were like saying, guys, we see something going on in the finance, in the insurance about blockchain. Not only blockchain, decentralized finance, NFTs, DAO, you name it. We see things here happening in your space because we see, if we look at a historical evolution, we see that this trend is really picking up speed. We see it's converging with other types of trends. We see it not only appearing in your space, but in basically any industry. We see a lot of investment in there. We see new startups. We see all these kinds of insights that really, for us, trigger all kinds of events where we say, you might look at that. And then they told us bluntly, we're not seeing this. It was 2019, we're not seeing this. We're going to all these events like Digital Finance Summit. Nothing has to do about blockchain. But today, if you see, I was at another event in Luxembourg, if you see what's really happening today within the finance, a lot has to do with blockchain, decentralized finance. So there was a lot going on beyond below the scene, which is now really popping up. And this is what the value of our AI-driven approach is, because we can spot it before anybody else.
So it's via web scraping or something that you do that? Like how do you manage?
We don't scrape because that's like a gray zone. We only we call it publicly available open data. Okay. So that's all kinds of data sources which we can get our hands on that we can. And this is like huge, hundreds of millions, 100 millions of documents, thousands of data sources, really spread out. Patent databases, startup information, industry-specific news, mass media news, social, blogs, fora, you name it, everything that we can get our hands on. And this is how our proprietary technology works. It can spot these trends in all these diverse data sets, and it can really follow how these trends emerge through time, whether it's impacting a company, or there are a couple of VCs here. Whenever as a VC you need to invest in something, we spot these different life cycles of innovation and really advise what to do with it next. I'm really sorry that I didn't have my slides, so I was a little bit...
You had an advantage.
What's the share of your revenues that is coming from financial services? You mentioned you target banks or asset managers, whatever, but do you have other type of clients? I assume yes, corporates that are not financial services companies.
That are not financial, yeah. We work for other industries, consumer goods, Procter & Gamble is one of it, media companies, Roularta Media Group is a Belgian insurer. We also work for the German broadcasting industries, retailers, you name it. And the cool thing is, well, whenever we see things appearing in that industry, it can also affect finance. So it's really like a win-win situation for all our customers that we are industry agnostic.
Yep. Thank you for your pitch. It was very good without the slides. When you say tailor to the context, when you want to, let's say, move into another vertical, retail or media, as you mentioned, how much time do you spend on getting all those data sets or data sources into the Trend Tracker platform for a new prospect or client?
It depends. Really good question, because we get that a lot. But it takes, like, for us, a week to do that, on average. But at this point, we have so much trends, all the industries are mapped, that it's a copyable model, which we can scale internationally as much as we want, basically, here.
Yeah, I wanted to know more on the advising parties of what you're doing. So you have a soft that gives a report, but you says, okay, we are not just putting the let's say the final the result of our research on your desk. Then we advise you as well. What is this? Can you a bit explain this advising part of your job, please?
Yeah, sure. we're an AI company, a data-driven company, so the advice is insights that we deliver. So one of our AI models is basically an action suggestion model. So in the end, it tells you, with this trend, you need to act upon it, or you need to wait a couple of years. And that's the action suggestion that comes out of it. And then they can dig deeper and see, why do we say that this is, so it's transparent. Why do we say that you need to act upon it? Okay, we see this and this and this appearing. And in the end, this is the advice that we deliver. Sometimes we do give some analyst services on top, but that's as minimum. In that case, we want to work or working with a partner network of consultants like Deloitte or PwC is one of them, where they use our data or our insights to advise to their clients. So this is like our go-to-market to really partner with consultants.
Okay, and what is the size of the team today?
We're 5 people strong, so we exist 2 years officially, 5 people strong, scaling fast, looking for funding the next, let's say, 6 months. So yeah.
Okay. Any question in the audience or in the jury?
I mean, one quick question about, you said that you can identify any trend, but when do you decide, or when does the system decide this is a trend? Because if you say in 2019, blockchain and insurance, perhaps someone in 2017 had tried it as well, but it was too early, just to get a...
Well, that's the cool thing, because it will pick it up. It will not flag it as saying it's an innovation opportunity for you, because there's a couple of criteria that are missing. But considering these AI models don't sleep, it's continuous. We can see how it grows in different industries. And it's like, and whenever we flag something, at this stage, we need to advise VCs, or at this stage, we need to advise corporates who are early adopters, who are a late majority, and so on and so on. So this is how it works, yeah. It picks them up and it follows them to see whether they mature out or they fade away again, or they converge with other things.
Thank you.
Thank you very much. Thank
Okay,
you.
thank you. Bye-bye.
Thank you. So I believe the next one is Frederic from Datavillage.
Yeah, good afternoon. Frederic, co-founder of Datavillage. And with Datavillage, we unlock the value of personal data by giving back control to people. So what's common between all these organizations and services on one hand, and consumer, a citizen, an employee on the other hand? So all organizations and services are collecting and managing personal data in their own silos to provide product. And we are all producing data, scattered data, duplicated data all over the place. 17% of users say they are losing control over the data and privacy. And most of the organizations within the next 5 years will miss data to remain competitive. Collecting more data will increase the cost of compliance. And 7 organizations of 10 fear sharing their data with other organizations because of the lack of trust between these organizations and with their users. And with Datavillage, we provide a platform for trust and privacy. So we place back the user data in the personal data store of the end users. They have full control over the data. Organizations can get access to this data, embed it into their user experience by getting consent and granular consent, thanks to our personal data passport. Organizations can then collaborate together to their consumers' shared data without collecting this data on their system, meaning that their algorithm is moving to the data cage. They keep the IP and they run the algorithm to process the data. They only get the derived data, the value of that data on their system. Maybe you have that feeling that, yeah, it's a bit crazy, it will not happen, but it's happening. And we are now working with the media industry, with RTBF, VRT, and upcoming one in the UK that will join the ecosystem. And they are using our solution to provide cross-platform content discovery. So the user get back data from global players such as Netflix and Spotify, and they use that data. So broadcasters are also collecting data, your web analytics, and they push back in the personal data store. Each broadcaster processes the data without collecting this data and provide individualized experience. Even for a new user, for the one they don't have data. So that's the magic. Moving to open finance, we provide also the platform to open finance use case, meaning that an investment platform can process this data without collecting this data, meaning they are using the interest profile for the first ecosystem, adding up PSD2 data, Coinbase data, even your tax return data from a government, processing, calculating your distribution of investment, and giving you back the next best investment, without again collecting this data on the system, ensuring full privacy. So about the market, so the market of privacy is expected to grow by 40% every year during the next 7 years. And our model is a B2B model, meaning that to create a village, an ecosystem is very low cost. It's just an instantiation of the platform. And there is a subscription per member. We also provide an incentive to give back data to the end user. And our vision is a fair and open market of derived data. We are now at seed stage, a team of 8 persons. With skills in AI, security, privacy, data semantic. And there is a key question. Why now? Looking back 1 year ago, the context was, I would say, completely different. Now, if you look about the regulation, so yes, there are GDPR, there are CCPA in the US is coming, but new regulations are coming, like the Data Governance Act that will foster the data sharing and trusting data sharing between organizations and enforce the control of the data by the end users. That's the first thing. The second thing is about using privacy as a market differentiator. So just look about the giant today. They are using privacy as a market differentiator. Apple brand themselves as a king of privacy. And last but not least, about technology. And the technology we use, the maturity is increasing. So Solid, the personal data store technology, which is now used by the Flemish government to provide a personal data store to each citizen. Confidential computing, the technology behind our data cage, is also the technology behind Signals, the app, chatting app, which is scaling quite well as well. So just to conclude, we do believe that for the recovery, this will happen through collaboration. And with Datavillage, we enable collaboration between organizations through their consumer data. So first, by giving back control to the end user, it reduces the cost of compliance. Second, by being transparent, increase the trust score of the organizations, meaning engaging more with users, but also with partners. And last but not least, using tech, privacy technology will open up new opportunities in regards to personal data. Thank you.
Hello. Did you already have some customer except RTB, VRT? We know that. Did you have other in other sectors?
So, as I said, we have one coming in the UK, but also in the media industry. So probably the biggest one. And we are now also in January starting in the Earth sector to work on patient data. So that's also something very interesting because on such type of use case, patients don't want to share their data, but they agree to let organizations use their data for research, for instance. So that's exactly these kind of things that works.
I have a question. You were talking about the UK, expanding to the UK. So in terms of GDPR, etc., they have the same, right? But I'm just wondering, in terms of implementation, if you look at some of the bases where you can process this data, are you seeing challenges when going to the UK market or not, because of those kind of nuances that comes into a market now?
Today, not, because I would say that yes, we rely on GDPR. But we mainly rely also on the, I would say, the appetite of actors to give back data to the end users. So it's not a blocking factor. And if you look about all the websites today, most of them are providing a way to get back data from the end user. So this is exactly the thing that we rely on to feed the personal data store of the end users. So no, we don't see any blocking, any challenge about that. No.
Has yeah. Oh, okay.
You talk a bit about the pricing model. Can you give us an idea about the average contract value that you're signing?
Yeah. So first, it depends on the type of data, the sensitivity of data, the number of data points, and the frequency of the processing. Processing data for research will happen less frequently than processing data for recommendation. So, for instance, in media is between 50K and 100K license a year to be able to use the platform.
Okay, thank you.
I have another question in terms of competition. Looking at the market here, for data privacy solution, for example, we have a small market compared to the rest of the FinTech and RegTech, right? So how do you position yourself in this market? It's 203 million here at the moment, globally. So where do you position yourself in that market compared to those few actors that are in the few players that are in the market?
So yeah, you're right. The privacy market is starting. So software privacy market is starting, and it's going a bit in different ways. You have pure tech providers that provide a privacy technology. That's one thing. That's one angle. There are the other one that are looking about the processing of data, storage of data. This is another angle. We are positioning ourselves as a platform to aggregate different technology to be able to manage the end-to-end data lifecycle and personal data lifecycle. So it's not about focusing on one technology or another. It's more about aggregating personal data store with confidential computing, federated machine learning, and making it, let's say, available out of the box to reduce the footprint of managing personal data by organization. So it's more in that area that we position ourselves.
Interesting. Thank you. Has anyone a question that you would like to ask? No? Yeah. Okay. Thank you very much.
Thank you. Thank you.
I think now we are with b.fine with Sarah. Klaas, sorry.
Unfortunately, I need to pitch from home due to COVID infection. So my name is Klaas Van Imschoot. I'm the CEO of b.fine, and today I would like to introduce you to our regulatory intelligence platform, BRX. With our platform BRX, we are actually leading banks to the next era of regulatory reporting. But maybe before we jump to the next era, let's first have a look at the current era and see which pains banks are currently facing within their regulatory reporting processes. What we see is, well, I think you all know since the financial crisis of 2007, 2008, banks have been exposed to what we call a regulatory tsunami. Due to those new regulations, a lot of new data and reporting requirements popped up. However, what we have seen is that most of the banks implemented this on top of their existing systems, and so they ended up with cumbersome processes and scattered data flows. And so in most cases, this resulted in late deliveries of their reports towards regulators, a lot of inconsistencies in their reports, a lot of data quality issues, and even regulatory fines. The latest example is Citigroup, which received a fine of almost $60 million for inconsistencies in their liquidity reporting. That was the angle of the bank, but also if you look at it from the angle of the supervisor, the regulator, there we also noticed a shift in focus. So there the focus shifted a bit away from reports, and they were more and more looking at data and the governance around the reporting processes. So one of the examples there is the credit reporting. There we really made a shift from report to really transaction-based reporting. So our conclusion is a bit that are shifting away from report-driven monolithic solutions, and that it's really time for a platform like BRX, where data is really at the center of everything. With our platform BRX, we are really going beyond reporting. And that means as well that we really look at it from the angle of the reporting user, and we guide the reporting user through every step of the process. There we digitalize, automate, simplify the process as much as possible, and combine that with our smart workflows, we can guarantee that banks will never miss a reporting deadline again. Actually, submitting for example, your COREP, FINREP regulatory reports was never that easy thanks to our platform. Furthermore, in the platform, we keep all information, communication, documentation centrally within the platform. And so this helps you in answering your questions from regulators, auditors, supervisors. So you don't really need to fear anymore any of those bodies, I would say. And also, we already mentioned that we don't believe in monolithic solutions. We rather rely on ecosystems. So that's why, for example, that we've integrated our platform with interesting companies like PwC, Colibra, Elysian, who will also pitch next in this session, and companies like FIS, because we truly believe that they play an important part of the value proposition in the regulatory reporting stream. So by integrating, we can offer a lot more, and people and banks can really make the reporting platform tailored to their needs. And of course, when we talk about compliance, there's always a cost linked to that. So we are also well aware of the ever increasing costs of compliance. We try to reduce the overall TCO of a regulatory reporting system by, first of all, making use of the latest technology and leveraging a lot of publicly available building blocks, like, for example, DPM. And at the same time, by leveraging on those building blocks, we can not only reduce costs, but also reduce drastically the time to market of being compliant with all those new regulations. In only 4 years, we were able to build up the b.fine team from only 2 founders up to a team of almost 40 people, with a strong track record in RegTech. So if you engage, by engaging with b.fine, actually you don't only get access to a fantastic platform, but you also have access to a lot of regulatory expertise. Today, we can already count more than 20 financial institutions within our customer base, ranging from financial institutions over investment firms to up to lease companies. So there, all of these financial institutions, they are really counting on b.fine to transform their complex and efficient reporting processes into an efficient reporting and data supply chain. So if you are always struggling with your reporting deadlines, if you have difficulties to keep up with the pace of regulatory change, are always confronted with high costs of running your reporting processes, talk with b.fine. With our platform BRX, we can offer you really peace of mind when it comes down to regulatory reporting. So yeah, don't hesitate to pass by at our booth. We are here at DFS. We are there with my colleagues. Will certainly help you and demonstrate our platform. You can also reach to me by mail or through the Bizaboo app. Thanks a lot for listening. Any questions?
Thank you, Klaas.
Thank you for the presentation. I do have a question to make sure I understand correctly the offer. Is it 100% tech-based, or you offer as well some kind of like consulting for implementation and like operating the actual platform well? Like, what's the actual offer?
Yeah, we are kind of all-in-one solution. So we offer services combined with the product. It depends a bit on the need, but we started initially b.fine as a consulting firm, and then we made the pivot towards a product firm. So now we can offer, we are a bit becoming a one-stop shop for regulatory reporting, let's say.
So you're evolving toward a tech, like a 100% tech solution. Is that correct to put it that way?
Well, of course, there will always be some service around,
sure.
like, for example, integration.
Implementation, definitely, yeah.
But that's indeed to go. Yeah.
If you had to provide a percentage of revenues between the two, like, can you give us an idea of the split? Is it 50-50? Is it 80-20? Is it?
Well, the objective there is to grow towards a 50-50 split. But as we only commercialized the platform beginning of the year, now the split is still like roughly spoken, it's 10% product and 90% consulting still.
Hi, Klaas. Thank you for your pitch. We're looking here at the slide with clients and ambassadors. Could you just indicate which of the logos are actually a user of the VRX platform?
Well, let's say the smaller brands are currently using already the platform. So if you look at the brokers, for example, already using the platform, there are also smaller banks like CKV is already using the platform. But KBC, Euroclear are, for example, these are clients for of our service offering.
And how long did it take on average to onboard the smaller ones onto the platform?
So the investment firms, that went quite quickly because of a new regulation. So that was also a driver that helped us a bit. And for a bank like CKV, it took almost a year. Okay. From the initial talks to the closure of the contract.
Yeah,
and that's a bit what we see. It's on average, the lead times are between 12 and 18 months for banks. So there are quite some banks in the pipeline, but it will only materialize in 2022.
And can you tell us a bit more about your competitors?
Yeah, our market is dominated by a few big players. So we have Volta, Recognology, I would say now, Attraxion as well, Moody's. So these are the big players in the market, I would say.
But in terms of product, are they more focused on service or product compared to you?
They also have services, but the main differentiator from a product perspective is our focus on teams, on stakeholders, because reporting is becoming more and more complex. So we look at from the angle of the team, while the current vendors are still really focused on the report itself. Still, so if you launch the application, for example, from Volta, you are directly dragged into the report. While there is a lot more steps before you can end up into the report. So our focus is on team and data.
I have a last question. Since you are already in the business of regulatory reporting, at the moment you are mostly focused on the financial reporting, but are you also considering expanding to also the non-financial reporting, such as ESG data?
That's indeed part of the focus as well. So we are now indeed more still focusing on the finance and risk reporting, but ESG will become part of, for example, of your risk reporting as well. So in the end, your climate risk will influence your credit risk. So it's also what we see now, for example, in the stress testing that is performed by ECB. There is already it's already a bit mixed up there. So ESG will be part of all those disclosures that we currently do as well. Okay. So there are already now a few separate disclosures, but in the end, it will be embedded probably in all your finance and risk disclosures.
Okay, interesting. Thank you. I don't know if someone from the team would like to ask the public, sorry, would like to ask a question. If not, we can go to the next speech. Thank you very much, Klaas.
Thank you.
Good afternoon. Okay, yes, I'm the last pitch here. Let's see. Hello, everyone. I'm Matthias Coessens from ElysianNxt, the managing director and also co-founder of the business. So basically, quickly, what is ElysianNxt about? Let me see if the slides work. Yes, here we go. So basically, ElysianNxt is a Belgian regtech company focused on regulatory risk. What's regulatory risk about? We basically, financial institutions, banks have to report at least on a monthly basis the risks they're taking, credit risk, interest rate risk, liquidity risk. Now, it's a fascinating world of reg risk because since the global financial crisis, regulators have asked for more and more what-if scenarios to be embedded in those risk calculations. So, yeah, banks had spent millions of dollars on systems that were good at producing month-end numbers. Now, there's a bit of a challenge because all those what-if scenarios require much more computing power, much more fast calculations, and so on and so forth. So, yeah, banks now have a bit of a problem because what can they do for the moment? Well, since they are lacking time to produce these numbers, these risk metrics, they basically go back to old school Excel, rely on high-level guesstimates by management to say, well, this is what we think under these macroeconomic scenarios, what's going to happen. COVID happens, payment relief schemes given to the banks, they were not ready for that. Oh, what's the impact of COVID on clients that will not pay back? Has my credit risk increased? Is there an impact on liquidity? God knows, So, how we're solving this problem? This is, of course, regulatory risk is not a new space. We're solving this through high-speed performance. That's basically our key differentiator. Through the help of technology, we're doing these calculations at least 10 times faster than the existing well-known platforms out there. The software has been designed for change from the ground up. So we were lucky enough 4 years ago to start from a blank sheet of paper, so we could use the latest and greatest technology available. Designed for change, meaning if a new regulation or a new decision from government would happen, well, a month later we have it in our product. Last but not least, it's much more cost effective. Cost effective, how does that happen? Well, implementation cycles are typically 50% of the more traditional players. Interaction with the system happens by users through our platform. They fire off calculations, they fire off simulations. Typically, other traditional platforms, you would need IT to execute those calculations. Reporting, as I said, fast calculations, fast processing, minutes rather than days, and in the end, the TCO, of course. Well, we founded the company about 4.5 years ago. We're particularly proud of already a couple of awards we've won with the product. So we continue to go for these awards because it's good for marketing, but it also means something. These award companies, they just don't give it to you like that when you pay for it. Those times are over. Now, when you see our journey, our customer journey, effectively founded in 2017. We started off in Southeast Asia. You see Indonesia there as a country, also Thailand. They were still riding on the IFRS 9 wave. IFRS 9 going live here in Europe in 2018, so that was over here in Europe. But of course, 2018, 2019, we were still riding on that wave because the deadline there was January 2020. But you see then, since January 2020, we're basically a bit in no man's land with regards to regulations, but we still managed to convince a number of banks, going to 25, 34, even this year we should be adding a couple more, and we started focusing back on the home countries, Europe, with clients in France, Belgium, and the Netherlands. So this is something we're particularly proud of. Now, how do we go to market? Because the market is basically the globe. We can't do it all by ourselves, being a scale-up, so we go with partners. So Klaas was just coming before us. We partner up with b.fine. Why? They do the reporting of the things we calculate, so good match. Yeah. We have partners in Australia, partners in the Middle East, so this is the best way for us to basically scale for the moment. What's our focus for the next 3 years? Well, we spoke about ESG already, all those stress testing requirements. Well, this is basically what we love to do, all those very complex calculations of what's the impact on your credit risk when all of a sudden a corporate is going to be hit with a high carbon tax, these kind of things. Very concrete examples of how the credit risk increases due to climate risk or transition risk. Yeah. The upcoming Basel IV directive, Basel IV has been pushed in the industry with 2 years, to 2025. It's not necessarily a bad thing for us because this gives us a bit more time to introduce ourselves to the banking sector. Yeah. And then last but not least, more focusing on the real integration of our platform, linking the different kind of risks with one another. Yeah. Thank you, that was my pitch. Sorry, I'll give it back to you.
Can you talk a little bit about the company?
So where we start the company, actually the history. Thank you. Maybe some background on the company. Where do we all come from? Well, similar to b.fine, actually, we all have our roots with financial architects, Finark. Finark was a Belgium-based company, and in 2012 had been acquired by Wolters Kluwer Financial Services. So we all have our roots with Finark, going from a 200-employee company to a 19,000-employee company. That was a bit of a change. Back then, quite a number of the starting team from our company were based in Southeast Asia. Hence the link also with setting up our development center there and focusing on Southeast Asia at first as a market. Some of us leaving WK also had some non-compete in Europe, so hence the late focus on Europe from a journey perspective. But basically that's where our roots are. Yeah.
And how would you then, I mean, why coming back to Europe and expanding in Europe right now? I mean, I understand it's the continent of regulation, right? So, well,
yeah, a couple of reasons. Of course, in Europe, there's a lot of financial institutions. There's a lot of regulation to be done. Plus, there's also a lot of conformity with regards to regulation. That's good for a vendor because you only have to build the EBA regulation once and you can cover the whole of mainland Europe. Yeah, okay. UK is now diverging a bit from it, but in the end, it's a good market to be in. The other reason is, in the end, with our model, having a development center in Southeast Asia and then having more sales channels here in Europe, I think from a pure, attracting IT talent and so on, that should be a good model too.
And on your slide, I think you mentioned 60% year-on-year growth. Yep. That's for the past years. Is this something you're...
We're gonna support. So the ARR. So we actually have two main revenue lines. One is the software subscription, annual software subscription. The other one is a professional services implementation fee of our software. So we do our implementations ourselves or through partners. Yeah, and the ARR growth is on the software subscription yearly that we grow, and it's we're about like 1.5 million at the moment. Yeah.
And you forecast still 60%?
Well, so we are now a little bit in a, as I said, regulatory standstill for the moment, with 2025 being the Basel IV regime. But some other countries, such as Australia, they already indicated we're going to do 2023, no matter what happens. So that's why we're focusing. We know we are going to have, some regulations hitting there. Plus, we also see still quite a bit replacement market in Europe for banks that have realized that their existing systems will never be able to cope with all these what-if and stress testing requirements. Mm-hmm. So that's where we still see, prior to the big wave of Basel IV hitting, that's where we still see quite a lot of expectations. So we definitely are confident to say we're going to keep on growing at least 60% year on year from a subs perspective.
Any other question? Then one last same question I asked your colleague. You mentioned SaaS and professional services are the two lines for your revenue generation. can you give us a split? Is it also like
50-50.
50-50?
Yeah, that's also, I mean, originally we were actually being on the conservative side, ask for more money on the implementation side, although it's not good for the longevity of your company, but still you don't know, definitely not in fixed price implementation, how long is it really going to take to implement this, and you're having a risk if you quote fixed price. But we realized that effectively the software is very flexible in a way, but easy to implement as well, because we build in the regulation in the software package itself. And so we're now in a 50-50 split. Yeah.
Okay, thank you.
Thank you.
Anyone else?
Maybe one question about crypto.
About crypto?
Yeah. So we see regulation popping up
Yeah.
every part of the world, and since you are also located in Southeast Asia, I was wondering what is your position? Are you already integrating that, or is it a standstill at the moment and you see what?
For the moment, it's more a bit look and see what happens on that front. Southeast Asia is a difficult market because you have a lot of local competition as well, which is more playing on the pure money factor. Now, the crypto thing hasn't really taken off there from our perspective in the countries that we're in. Yeah, so we're mostly the majority of our clients are in Indonesia and Thailand, a couple in Malaysia. But for instance, like those more modern countries between brackets, Singapore, Hong Kong, it's not so attractive markets for us. Why not? Because there's only a few financial players out there, local financial players with local decision powers there. Like Singapore, effectively there's 3 local banks. The rest are all international banks where, okay, we can only sell to the local banks really. Where Indonesia, 100 local financial institutions. So that for us was
But Australia is also like Singapore.
Australia is also like that, hence the reason why we want to be in that country, but through partners. We are never going to invest ourselves in a full-time sales rep, for instance, there, and pre-sales rep, because it's not just one person. It would be just too expensive and difficult and hard to reach also. I mean, it's not just a little flight down under.
Thank you.
Thank you.
Is there anyone from the group? Yeah.
Thank you. Hi, Matthias.
Hey, Chris.
You just mentioned that you're able to compete on speed. Like you're able to deliver new validation to the market through your software within a month. Like for instance, the impact of COVID on validation. How are you able to do that so quickly? Since I've worked for big clients, helped them, and they really had trouble fixing this within 6 months.
Good question. I mean, the short answer is technology. Yeah. So the platform has been built on a microservices architecture. And while I'm not a technical person myself, basically microservice architecture does one thing very particularly without touching any other bits and pieces of your software. Yeah. So for instance, the COVID payment relief scheme measure that required a change in our cash flow engine. Yeah. But that means we just had to update our cash flow engine. We're willing to do those installations, upgrades ourselves for our clients. We just go there, implement it, test it. Okay, they can have their what-if analysis already run through their systems. I'm not saying we deploy it immediately into production because, of course, big players, they want certainty that something works, but they could already give high-level estimates to their management saying this is what these cash flow payment relief schemes would mean on our repayments of clients. Yeah. That was a bit going into detail, but...
No, but that's perfect. I think everyone is super enthusiastic to know more.
Okay.
Good. If there is no other question, I think we wrap it up. All right.
Thanks a lot.
Wrap it up, and yeah, thank you. Thank you very much. And there is a last speech for this afternoon session. Yeah, thank you.
I'm just going to use the mic. Thanks.
So thank you, Christiaan.
Thanks. Thank you very much. I'm the last pitch tonight, this afternoon, so I'll really try and make it as interesting as possible. I'd also like to thank FinTech Belgium for this wonderful conference, as well as the opportunity to come and pitch here. My name is Christiaan Erasmus. I'm the CEO of SilverCloud, and I'm here to tell you about quick and easy content claims. So just as a quick introduction, the company was registered in the Netherlands in 2019. It forms part of Thessel's international expansion, and Thessel is the de facto content quantification and settlement platform in South Africa. Our vision is to enhance people's lives by making content insurance effortless and fair. And we're not just talking about the policyholders and those unfortunate enough to become claimants, but also the claims handler dealing with the claim, as well as the stakeholders behind the insurers and the suppliers that we deal with. We're a bootstrap business, and we're quite proud of the achievements that and the awards that we've received so far. Just as a quick introduction, I am the founder of Thessel. So I've been involved in this space for the last 20 years. Out of a technical point of view, our business is managed by Peter Oosthuizen, who's our CTO, and makes sense of the complex data structures that we work with. We've also got at our sister company 25 claims handlers, desktop assessors with over a century's experience. And then we've also got strategic advisors being mostly William Kirsch, who's the founder of Prime Media, which is the second largest media company in South Africa. The problem that we're addressing, and if you go back 10 years ago, this is what claims agents' desks look like with claim files. Now that everything's in a computer, I'm sure the computer insides also just look the same. But getting to the bottom of it, a content claim is a long and laborious process. And what happens, unfortunately, is you end up with frustrated clients and high settlement costs. So this is where we try and help the the insurers and the claims agents to make the process as efficient as possible. And how we're able to do this is we have developed a large structured item data set by analyzing millions and millions of actual insurance quotes that was built up over the years. We have further enhanced it with external data sources. And with that, we can accurately identify the item that is being claimed. We do that through make, model, natural language processing. We also then make use of IMEI number. We're working towards serial number conversion, as well as where we want to end up is that you walk through a house with a camera, and we catalog all the contents of the house with the client walking through. Once the item is identified, then through algorithms and machine learning, we determine the correct replacements. And it's not just a single replacement, it can be multiple in most circumstances, which we then quantify from the panel suppliers for that specific insurer. And if we can't quantify it instantaneously, then it breaks out into a quick desktop assessing process. And that's where our experience comes in as well, or the insurer can manage that process themselves. And then once the claim has been quantified, it can be settled via the most appropriate method. And the methods are vouchers, which is a virtualized gift card. We also have a prepaid debit card program, which is run by MasterCard. Purchase orders, which is your old legacy settlement methods. And then last but not least, cash, because sometimes cash is the best possible solution to settle the claim. So if we look at the categories that we participate in, we always say if you take a house and you flip it upside down, anything with a make and a model that falls out, that is of value, that is where we can participate in. And then our main goal is to just offer a much better claims experience. So we speed up the claims by a factor of multiples, which creates trust, and then also a loyal client, which then prevents clients from moving after a specific incident. We decrease the total claims cost, which improves the loss ratio, and then also it results in lower premiums. And then lastly is you can communicate to your client in a preferred channel. So we also set up to evolve with the insurers, that we go from manual, which is days, to augmented environments, to a fully automated solution with straight-through processing being the holy grail, which is in minutes. So We've developed a modern platform. We were quite fortunate. Everything is developed on AWS serverless technology, which is extremely scalable and and safe and secure. Everything is developed around our data engine. And with the data engine, we are API first company. So our gold standard is to integrate into the F&O system. The F&O system, so that it can speed up the process where it becomes then a self-help portal. Or we can integrate into the claims system where we then help the claims agent in an augmented scenario. Then we understand that there's not always development capacity, so we have also developed a claims agent portal to just speed up the pilots and usage from there. We're currently being piloted in the Netherlands. It started off with a claims agent pilot. We're busy with integration into the F&O platform. We're busy replacing the legacy platform in South Africa. And then towards, early next year, we will be piloting in the UK and Australia. In the UK, we have also appointed Cognisys Technologies as our reseller. And then we want to use that as a springboard into the rest of Europe. And then once we're strong enough to be able to take on the massive North American market. So thank you very much. It's been great being here. If you've got any questions or you want to get hold of me, there's my details. Feel free to contact me. Thanks.
Thank you for the presentation. So you finished with some talking about pilots.
Yeah.
How is your sales cycle going? Is it compulsory to have pilots? What are the stages?
We're in an extremely long sales cycle process. Some of the rollouts that we've been in have been 2 years. I'm talking historically. So we normally recommend starting off in a pilot. There's a no commitment, with the insurer, so it just eases that whole process. And once they understand the benefits that are achievable, then it becomes, great to get the integration done from there. But it is a long sales cycle, which is a good thing. Everybody has to go through that, so our competitors would also have to.
According to your experience there, are there any markets that you want to tackle first?
So with our rollout at the moment, in the Netherlands and South Africa, that's great from now. We are fortunate that we have got very strategic relationships with insurers that have expanded into the UK and into Australia, which we're just piggybacking off. So that's why I'm confident we'll be able to pilot there. But I mean, the main market we would want to, for understandable, insurance market would be North American market, but that is really a couple of years off.
Could you just briefly elaborate on the onboarding process with the smartphone, because I didn't really get that.
Sorry, I'm not understanding your question. So with smartphones?
Yeah, so you inventorizing the...
Oh, okay. So yeah, that's where we want to go to. So it's with visual item identification. Fortunately, LiDAR is going to, in 5 years' time, we think it should be the norm on most cell phone cameras, because you do need LiDAR to get the actual measurements of the item so that you can more accurately identify the item. And then from there, once a house has been catalogued, it makes sure that the client is not underinsured, so it prevents that. And then from there, if a claim ever occurs, then it's an extremely quick process. You would say, okay, fine, I had a claim. Great, which one of these items was involved there? And it's already been done. It also gives the insurers a method to communicate to their clients more regularly. Instead of the 1.2 to 1.6 iterations per year, you can now communicate to your client more often, and with that, then just show that you care. So notify the client that they're underinsured and they need to update their items.
Okay, thank you.
Thanks.
Hello. Hi, can you please elaborate a little bit on the payout methods? I was surprised to see the voucher, but
Okay.
We've talked in the past already, and I remember you mentioned that already, but I don't remember exactly the deal with the vouchers and then, yeah.
Okay, great. So once the claim has been quantified, then it needs to be settled. So The various options that we've got is firstly a voucher, which is a virtualized gift card as such, which we then send through to the client in various methods. The most secure being SMS, that you would contact it directly, send it directly to the client or through the insurer's app. But then we also have a filtered prepaid MasterCard program, and that works quite efficiently because you could, if a client is claiming for jewelry, then you could filter that they can only spend that specific card at jewelry. So it ensures that the insurers have got a new item to put back on a policy. So it's not that the insurer would do a cash payout, but then from there, never, the client goes and spends it on holiday, and then doesn't have an item to reinsure again.
Is it a way as well for you to generate another revenue line, or is it really to make sure they buy the exact same item?
It is a revenue line. Yeah. We do share that with the insurers. It does aggregate, so we aggregate all the spend of the insurers. If you look at Thesel, it's the largest voucher issuer in South Africa. We're not arrogant enough to say that it's our spend, it's the insurer spend, so we do have a revenue share with them in place for that.
Okay, thank you.
Thanks, Pauline.
Has anyone a question from the public? No?